Good afternoon. This is Sean Golding with Golding and Golding. The topic of today's presentation is the very basics. What is an FBAR? A typical situation, a taxpayer will be getting ready to file his or her tax returns for the year. Maybe they just hooked up with a new CPA, they get an organizer, they start doing some research, and what do you know? They realize that in the current year, and oftentimes several previous years, they were required to file something called an FBAR. FBAR is an acronym. It stands for Foreign Bank Account Reporting. Technically, it's Foreign Bank and Financial Account Reporting because it's not limited to banks. And the actual name of the form is FinCEN Form 114. FinCEN refers to the Financial Crimes Enforcement Network, as I've kind of reiterated ad nauseum throughout all of our years of presentations. And criminal has rarely, if anything, to do with the FBAR. Is just an unfortunate name. 99% of the time, an FBAR issue has nothing to do with anything criminal. Submitting one does not make you a criminal. Despite all the horrible fear-mongering and scaremongering you've read online, most of the time it's a pretty simple process. So the FBAR is due to be filed when your tax return is filed. Prior to 2016, it was filed at June 30th. Now, it's filed whenever your tax returns are filed. So if your tax returns are due April 15th, the FBAR is due April 15th. If you apply for an extension for your tax return, the FBAR goes on automatic extension. So as of now, 2020, for your 2019 tax year, you don't have to file a separate extension for the FBAR. That could change in the future. So if you're listening to this at a future time for a future tax year, you should double check. The FBAR is filed electronically. And if you meet the threshold for filing, you have to file it irrespective of whether you have to file a tax return. So let's say you're a U.S. person, you're a citizen, and you're going through your taxes for the year. You didn't have much income. Maybe you're just living off the value of the account, taking money out each year. You go to the IRS website, you put in the calculations, and based on your income, you don't have to file a tax return. Well, even if you meet the threshold requirement for filing an FBAR, if you don't have to file a tax return, you still have to file the FBAR. So that's something to keep in mind. Common question is, what is the threshold requirement for filing the FBAR? So it goes like this. Whether you have one account or 50 accounts, you have to look at the accounts and then aggregate the maximum balances of the accounts together. And if on any given day of the year, the annual aggregate total of those accounts exceeds $10,000, you have to file the FBAR. So some people get thrown off if it's $10,000 per account. No, it's a total value aggregate of all the accounts. $10,000 exceeds $10,000 on any given day. So completing the FBAR is well, let me take a step back here. One more thing to keep in mind is who has to file the FBAR. It's not just individuals, it's corporations, entities, businesses, estates, trusts, anyone or any person technically that qualifies. And when it comes to individuals, it's more than just green card holders and citizens. If you're a visa holder or foreigner and you meet the substantial presence test, if you're on a B1, B2, E2 or E3, L1, H1B, EB5, O, and you meet the substantial presence test, you still have to file. If you're F1, you get an exemption for the first 5 years. That's beyond the scope of this presentation, but food for thought. So what goes on the FBAR? Relative to other informational returns, it's not that bad. It's not like the 5471, which is a pretty comprehensive accounting, bookkeeping sort of form. The FBAR is just basically the account information, the address, the institution name, the account number, and the maximum value. Oftentimes, depending on the country, the type of account, it may be difficult to get the actual maximum value. You just do the best that you can. You have a passbook account, or you're in a country where they don't offer up statements or that information, you just do the best you can. You have to give it a diligent and reasonable effort. Another important practice tip is that the FBAR is not just bank accounts. The FBAR refers to several different types of accounts. You may have a life insurance, a pension plan, investment accounts, mutual fund account, retirement account. Now, if you have individually owned stock, for example, that doesn't go on the FBAR. it would go on the 8938 separate presentation. But the FBAR would include accounts. So if you have an investment account, if you're in India, you have a DMAT account, something like that, that would still be included. How is the FBAR filed? It's filed electronically. Back in the day, you could file it paper, but since 2013 going forward, you would file the FBAR electronically online on the FinCEN website. After filing it, you'll receive an acknowledgement, confirmation, and then a follow-up confirmation. It's important to keep those just in case the IRS ever wants to come after you for FBAR-related matters. You have proof that you filed it. In addition, if you're going to amend it, it helps to have that information. If you don't have it, you can just type in zeros for the BSA identifier, but it always helps to have the identifier if you can get it. Common question we get is, what happens if I don't file it timely? Well, if you don't file it timely, if it's incomplete, if it's never filed, you could be subject to potential fines and penalties. Now, in recent years, the IRS has made FBAR enforcement a key priority. So it's important to stay in compliance or get into compliance if you're not in there already. There's various different levels of penalties. Two of the most common are the willful penalties and the non-willful penalties. There's also criminal penalties, but those are pretty rare. That's an entirely separate ballgame. In order to get into compliance, there's various FBAR Amnesty programs, the traditional voluntary disclosure program, if you're willful. Some bad information we've seen online and clients come to us. They did terminate or close the OVDP program, but that was in September 2018. But they also expanded the traditional voluntary disclosure program in March of 2019. So if you're willful and you don't qualify for any of the Streamline programs, even if you're not willful, you don't qualify for any of these other programs, you can still do the traditional voluntary disclosure program. The penalty computation has changed, so you should look into that before deciding to jump into that program. But for some people, it's a great opportunity. There are some other programs as well. You've probably heard of the Streamline programs, the Streamline Domestic Offshore Procedures, Streamline Foreign Offshore Procedures. They're both for FBAR and other informational returns, and they're both for offshore accounts. You can also disclose unreported domestic income, but it does require those foreign accounts. When you see those two words, Streamline Domestic Offshore, Streamline Foreign Offshore, they both refer to foreign accounts, assets, investments, and income. Domestic means U.S. resident, foreign means non-U.S. resident or foreign resident. There's also other programs such as the delinquency procedures, or technically the delinquent international information return submission procedures, or the delinquent FBAR submission procedures, or reasonable cause. These are programs that you should discuss with an experienced attorney at the time you decide you want to go forward. That's our introduction to the FBAR. My name is Sean Golding with Golding & Golding. You can visit our main website, goldinglawyers.com, where we have tons of information regarding the FBAR and other international offshore-related matters. We also have a separate sister website called irsstreamlineprocedures.com, dedicated solely to the Streamline procedures. Thank you for your time. Have a nice rest of the evening.